topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning and welcome to Tax Talk for You. Man, it's a cold day. Started a bad weekend here with ice. No snow. If we're going to be cold, we might as well have snow, as my wife would say. But instead, we just got ice. So we kind of closed the office yesterday thinking the roads were still going to be bad. So we didn't make it in. So we're working from home at the dining room table. We've got multiple computers set up here with multiple screens. So if you hear the dogs, it's because we're at home. Morning started out really cold, down in the 20s. I know if you're from the north, 20s is nothing. Did grow up in Illinois, so I do know what heavy snow and real cold weather is. So. But when you're getting up at 5 or 6 in the morning, going out and making sure the pigs are fed, the chickens have unfrozen water, and then the cows have food in the morning. Not to mention, they make sure they have their hay, but then you got to break the water in the water troughs. So that was our fun-filled morning this morning. And then come back in and try to get computers set up. So I was kind of running hectic here, making sure that everything works. Now, my problem is I got monitors on the wrong side. So moving the mouse back and forth is kind of a little more difficult. But hey, we're not here to talk about that and the difficulties of running the home office on a short notice. We're here to talk about your tax preparation for 2025. I know everybody's getting ready. Everybody's anxious because, hey, you know what most people think is, I want a refund. Well, refunds aren't really all they're cracked up to be. It means you just loan the government money interest-free for most of the year. You've been giving them too much, so they're just giving you money back. It's not their money. It was your money. So if you actually calculate your W-4 correct, you should be about break even when you file your taxes. And you should be putting that money away every single month, earning interest on it or investing it, whatever your personal choice is. I think Dave Ramsey is the one that says it all the time, is why give the government more money just to get your money back? So you should do a little better planning on your W-4s. So that you're paying the right amount. Now, if you're self-employed, it's a little more difficult because what you're doing is making estimated tax payments every quarter. And estimated taxes generally are decided based on your 2024 tax return. And so you've been paying in taxes based on that tax rate. I think my dog's over here barking. It's no big deal, but hey, everybody loves dogs, so we've got to have them here in the background. So, again, if you're self-employed, you're making those estimates based on your 2024 taxes, and you've paid them all throughout the year. Now, if business has increased and gotten better and your net income's better, you're going to owe more tax come April 15th. So you got to be prepared for that. If your business has been going down, you should be working with your tax person to redefine your estimates and base it on actual. A little more work, probably a little more expensive to do that, but at least you're not paying in too much money. Also, your tax preparer should be made aware of increase in business so that they can kind of help you look at your estimates and see if you can make increased estimates or whatever for 2025. Now, you're getting into tax prep. If you're doing it yourself, some of this information you're going to have. If you're using a tax preparer, you've got to start putting this together. So you're going to gather the necessary documents to make sure that you're going to have a smooth filing process. And kind of go through this comprehensively. And then a little later on, we're going to answer some questions about, overtime and stuff like that, and get into what's going to save you money in 2026. So we've got a lot of good things coming up. So first thing you're going to do is make sure you gather all your personal information, your social security numbers for you, your spouse, and all your dependents, dates of birth for all you, your spouse, and every one of your dependents. Preferably if you're coming to Taxation Solutions, we're going to ask for the prior year's tax return as well, both federal and state, kind of for reference, but also to make sure that we're not missing anything. Also to do a free review, so we make sure that you did everything right the previous year, or you're prepared. And especially if you're in business, we see a lot of mistakes on business returns because the preparer doesn't know what they're doing, especially in the trucking industry. Owner operators, independent drivers, we see a lot of mistakes on their returns as well. And then what you want to do is make sure you start gathering your income documents, your W-2s from your employers. And it could be one, could be two, it could be multiple, but both you and your wife also might want to look at your dependent kids if they're working, get their W-2s and have us prepare their returns as well. Sometimes we can look at them, especially if they're college age, and make some better decisions for you. You want to make sure if you're self-employed or you do any contract work or things like that, you want to make sure you get your 1099 NECs, your interest, dividends. I get a lot of people that come to me and go, hey, I don't have any dividends. But for some reason, they did have an account maybe over Fidelity or Schwab or something, maybe through the employer or whatever, that they were getting dividends. And so we see sometimes dividends are missed. So make sure you're looking at all your investment accounts and see if they are going to provide you 1099Bs with brokerage statements, so that we can make sure we get the dividends and interest off that brokerage account. If you have a bank account, you may be earning a little bit of interest. If it's under $10, they're not going to send you 1099 NIT. But if it's over that amount, then yes, they're going to include that to you. And a lot of times it's just disclosed on your bank statements as well. So you can look at your year-end bank statement and it should say year-to-date interest over there. So it's a good place to get it. Now, you may also get a 1099G if you had unemployment. So if you weren't working and you were collecting unemployment, then you're going to want the 1099G over there. Sometimes they're withholding federal income tax. Sometimes they're withholding state income tax. But all that information, including the income, is necessary for your taxes, because unemployment benefits is taxable. Yes, I know. Why? Because it is. And then you might get a W-2G. Any lottery or gambling winnings comes on a Form W-2G. Now, your losses for gambling can be deductible, but only up to the extent of winnings. And there's a lot of rules to deduct gambling losses against gambling winnings. That would be a whole nother show and a whole nother topic to get in and talk about. If we have a lot of people that had gambling winnings or lottery winnings and want us to discuss it, man, we could do it in another show out there as well, or you can call us and we can work with you to make sure you're getting the right deduction. Now, other income forms you might get are K-1s. So K-1 is basically a statement from a partnership return, as a partner, you get a K1 from the business. Or if you are a part owner of an S Corp, you would get a K1 from the 1120S. That is the distribution of income, earnings, interest, depreciation, where it passes through to you as the business owner. So you do have that pass-through income coming to you as well. So you will need the K1s from each and every business you may own. So if you own part of a real estate investment company, you would probably get a K1, and it would have the appropriate deductions of net income, realty income, interest income, and then any special depreciation like Section 179 would be listed on there as well. And it would also list what was distributed to you from the business as well. Now, remember, distributions in itself are not taxable. Only what they're showing in income is taxable, unless you've been distributed more money than when you have equity in the business. So that's a whole different calculation on basis. We've covered that a lot of times in our S Corp talks. So you can look at our podcast at Tax Talk, the number 4 letter U.com, and you can look up S Corp and see some of the things that we've talked about for S Corps, and the deductibility and income that comes over to you. So those are kind of some of the fun things. Now, if we get into partnership K1s, we need to talk about a few other things that are on there, and we're going to do that right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. And again, you can find us at Tax Talk, the number 4 letter U.com, and find all of our episodes there. Or you can also search on iHeart, Spotify, Spreaker, pretty much any web hosting, podcast hosting websites that are out there. You can find us. So take a look for us and find our podcast and never miss an episode. Also, by following us at Tax Talk for You, we're following us on Facebook as well. Hey, we were talking about K1s and some interesting points that you need to make sure that you're aware of on partnerships. The partnership K1s are going to be very similar to the K1s from an S Corp. However, they may list the income and rental income, net income, and may list interest income, but it's also going to have lines for guaranteed payments. So if you're running an S Corp, you've got to have a reasonable salary. Same with S Corps. So you'll have a reasonable salary as an S Corp, but as a partnership, you also have to have a reasonable salary as well. Now, S Corp, you put it through a W-2 income as an S Corp, but as a partnership, you receive what is called guaranteed payments. Guaranteed payments are your reasonable salary for an owner working in the business. Now, that reasonable salary that you are receiving is determined by the business owners. and then is taxable for Social Security, Medicare on your personal return. Business does not pay it. You, as the owner receiving that K-1 from a partnership, do pay that. So you need to be aware of that, especially if you're new to partnerships and maybe you just got into running your own partnership. You got to be aware that you still have to have that reasonable salary, but it is taxed differently and listed differently than it would be as a S corp giving a reasonable salary to a business owner. So that's additional income and additional taxes there on your personal tax return, which means the amount that they list there is going to be subject to that 15.3% Social Security and Medicare tax combined up to the limits of Social Security, and then Medicare tax at 2.9%, unlimited going up. So you need to be aware of that. So it keeps things fun when you're in a partnership, making sure that you know what you're doing, how you're doing it, and it's done correctly. We've seen a lot of partnership returns come through, don't have guarantee payments. We've also seen a lot of S corps where the owners never received a reasonable salary, meaning they never got a W-2, they were never paid payroll. All those things can trigger audits for you as the business owner, both for the business and personal. So you want to be aware of that information so that you're making sure that whoever's preparing the returns, not just for you personally, but for the business, is doing it correctly. So once you've got most of that, you're now looking for deductions. Everybody wants to deduct everything under the sun. And if you're W-2, you're predominantly going off of Schedule A. So you're looking for deductible expenses, charitable contributions, medical costs, documentation for education-related credits, 1098-T from the colleges, mortgage interest, Form 1098. So if you're going to be itemizing, you're looking for maximizing charitable contributions, your mortgage interest, your property taxes. Those are going to be the predominant things that you have. Now, if you're in a state, maybe like California or New York, you're going to have really high, maybe state income taxes as well. And so those are deductible. And the new caps on state and local taxes being at around $40,000 next to the one big, beautiful bill, you have a little bit more deductibility out there. And that's also, including property taxes and things like that. So if your state has high property taxes, you'll be able to take advantage of additional deductions there as well from those deductions for the property taxes you paid in 2025. Just because you own and you didn't pay them until maybe January does not get your deduction, because I know sometimes we used to work on this, and if somebody was in a pretty high property tax state or state income tax and you could defer paying your taxes to the next year or something, you could double up in 1 year and get a better deduction. And then other times you would just, if you're not hitting it, you just pay it as you go. So if you're in a property tax and maybe you're right at the borderline, let's say your property tax was $9,000 and it was only limited to $10,000, and your mortgage interest wasn't high enough combined to get you over the standard deduction. Now, if you doubled up property taxes, it may get you over that level. Or even if your mortgage interest and your property taxes didn't total high enough to get over the standard deduction, we would look at doubling your property taxes by having you pay the following year's taxes in January and the other next year's in December. So you get to double up. So helps you be able to itemize, making charitable contributions and stuff like that. Now, some of the other things that you're going to need is a record of your estimated tax payments. Hey, don't think, oh, I think I made this. No, make sure you save the receipt when you go in and pay estimated taxes. So if you're paying estimated taxes for federal, you're paying estimated taxes for state, make sure you save a copy of those receipts. If you didn't, and you have an account at irs.gov, you can go in and actually pull what your tax payments were. How much did you pay? And that includes, looking at last year's money that maybe you applied to 2025's taxes from your 2024 tax return. See, sometimes the IRS adjusts it. They send you letters and you completely forget about it. And you don't realize that they made the adjustment. Now, all of a sudden, they took more money out of it and you paid in less money than you thought. So, some of the things to be aware of is making sure that you have a good record of your estimated tax payments. And that goes for the state as well. If you're paying estimates into the state, you want to make sure you've got a record of what you paid in to the state. And, have that information available to your preparers so that, hey, when we're preparing the returns, we know, hey, this is what you paid in. And then bank information. Bank account and routing numbers for direct deposit or refunds or payment of taxes, taxes owed is important. Now, you can still mail in a check. You can still go online at irs.gov and pay. However, the IRS is starting to transition away from mailing paper checks and doing direct deposit only. They were supposed to start this last September. Now, they revised it and moved it back a little bit. They didn't want checks being sent in. They didn't want to send checks out. They were trying to get to paperless and everything else. Well, some of those rules have been rescinded, and I'm not sure exactly when they're going to get back to it. But there's rumors they're trying to get it done so that it is not a check transaction anymore. It is direct debit or direct deposit, depending on whether you've got taxes owed or if you're actually getting a refund coming back. So you need to be aware of those things. Now, some of the other things that you might have is childcare records. So if you're paying for childcare, you would have to get the provider's tax ID number, a statement from them for what you paid for each child. So, they usually break it down that child 1 had this, child 2 is this, child 3 has this amount, and then you take and deduct. Now, in order to take child care deduction, both spouses actually have to be working. Now, if you're a single mother or single father raising kids and you're having to pay child care expenses, then you'd be able to take the deduction there as a household. So you would want to have as much of that information there as possible. So keep that information out there. One of the other things that you might have is you may have an identity IP PIN, an identity protection PIN that the IRS provides. They send that letter every year. So if you've requested one, they will annually send you that IP PIN every single January, and you get a new one every single year. So you want to make sure you keep that letter and send that to your tax preparer so that they can file their returns as well. If you lost it, you can call the IRS and get more information. Hey, we're going to take a short break, and then when we come back, we're going to continue talking a little bit more about 2025 taxes, but then start talking about what is going to happen for 2026 and beyond. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We always appreciate questions. And a question came in from Jesse. What is the standard deduction amounts for 2025? If you're single or married filing separately, it's $15,750. If you're married filing jointly, or maybe you're a surviving spouse, it's $31,500. If you're head of household, it's $23,625. For those of you who are 65 or older or blind or have additional deductions that apply, if you're single or head of household, it is an added $2,000. If you're married, filing jointly, or surviving spouse, it's an additional $1,600. So you can be aware of those things that are out there. Now, one of the biggest questions we keep getting across the board is the deduction of overtime on taxes. Yeah, one big, beautiful bill added nice complications to the tax law. So when you're deducting taxes for overtime pay, it's generally taxable income. However, overtime earnings are included in your overall taxable income, means you'll pay federal tax, income tax on it, and Social Security. Employers typically will hold taxes from overtime pay, and you can look at your paycheck stub to see that. So, you got to be aware of that information out there. They've added some complications to be able to do that. Those deductions out there end up being basically right around 1/3 of the overtime pay from what I've seen in the calculations. We're still working on this because we're not seeing the information laid out on W-2s like we thought it should be. So, you need to be aware of those questions, and then make sure that you're also providing your preparer the information of your overtime from your paycheck. So give your last paycheck stub, and make sure that we're able to get that information so that we can try to calculate the income and then deductibility of overtime from the taxes as we go. So you need to be aware of those things for overtime. Make sure when you give your W-2, give your last paycheck stub as well. And then we'll go through some complicated tax calculations to determine what should have been deducted and non-taxed on your paycheck for overtime, and make sure it was done right. Now, when we start talking about 2026, we're talking about not just 2025's filing deadline, which makes sure that you file by April 15th, 2026. They've actually started accepting returns for 2025, but there's going to have some major changes to tax provisions. Those are the standard deduction. It's going up, listed as $32,200. Married filing separately is going to go up to $16,100, and head of household to $24,150. Earned income tax credit, maximum EITC for qualifying taxpayers with 3 or more children rises to $8,231, up from $8,046 in 2025. So, you can be aware of those things as you go. Alternative minimum tax. Yes, that still does apply in some cases. Exemption for unmarried is up to 90,100. Married couples up to 140. Both with some phase out thresholds. Estate tax is going up from $13,990,000 to $15 million. And then the adoption tax credits are actually moving from 17,000 to 80 in 2025 to 17,670 if you're going through and adopting a child. And then employer provided childcare. The credit for employers increased from 150,000 to $500,000. Eligible for small businesses may qualify up to 600,000. So your employer could potentially give you some child care credits and stuff out there. So, you have a lot of filing options. You can use the direct file with the IRS, and you can use the free file if you qualify, or some commercial software. Schedule A for 2025 has changed. There's going to be a new Schedule 1A to claim the latest deductions, such as for tips, overtime, car loan interest, etc. We're going to see how this all works out. There's going to be new things that are coming in and making sure that it's done right. So even if you're an individual tax preparer and you are trying to prepare your own taxes, I still suggest you use a professional, because some of these forms are going to start getting complicated. See, if you remember back, they were talking about, we're going to have this postcard form. Well, the government and IRS and everybody just wanted to change the form and just said, how much did you make? Send it in. That was as easy as the postcard was supposed to be. So the government would just dole out how much money you should have. And now, just kidding. But they did go to the postcard, and it was multiple little postcards that were supposed to be there and multiple extra schedules. So they went from 1040 plus Schedule A to a 1040 pages 1, 2, and 3, and then Schedule 1, Schedule 2, Schedule 3, all behind it. And none of them other ones were really postcard size. So if it all was, you would have been stacking postcards, from here to Kingdom Come. So be aware that you will have Schedule 1A out there as well. Income reporting, the threshold for receiving a 1099K is going up to $20,000 in gross payments. Now, 1099K is what you receive from your merchant account when you're accepting merchant transactions. So if you're running a small business and doing under 20,000 of income, and whether you're running through, let's say, PayPal or Stripe or some of the other ones, and it comes out to 19,000 and you had less than 200 transactions, they're not going to send you a 1099K, nor are they sending it to the government. Whereas normally they would go through and do it. So, be aware of some of that. There's going to be changes to the 1099 NEC, and I think those deductions are, bless you to my wife who's working over here too. And 1099 NEC is going up to like $2,000. So it's not going to be the $600 threshold in 2026. It's going to be increasing so that you don't have to give out 1099s just for giving somebody, paying somebody $600 to work in your business. We all face challenges. IRS is facing challenges, believe it or not. They're resorting to more and more AI, more and more resorting to matching on your tax returns. So income, deduction matching, things that are getting reported to the IRS, they're matching back to your tax return. So you want to make sure you've got all your documents. And, with a smaller IRS workforce, it's going to take a little longer to get some of these things implemented, and they'll have some delays and everything out there. If you're filing a paper return still, those delays in refunds and processing of returns are going to be longer and longer and longer. If you're filing back taxes, the filing time for them to process is going to take them much longer. We've seen some back returns take a year to get processed. These might even be further processed. We still wish the IRS would have e-filing for more than just 3 years, because you can only file 25, 24, and 23's tax returns electronically. Everything beyond that, you've got a paper file. And when you are dealing with somebody that has a tax problem and you've got to actually paper file these returns, it takes much longer to get those returns processed. And if there's some liability that's out there, we suggest you pay it in if you can when you file that paper return, so that the money is already there, because they're going to calculate penalties and interest all the way up till when it's paid, even if it takes them a year or more to process the return. They're going to hit you for everything but the kitchen sink. And sometimes I think they throw the kitchen sink in as well, because they want every dollar from you, even if you can't afford it, as much as possible. So there's a lot of other significant changes, and we've gone through the One Big Beautiful Bill in a few of our other podcasts, and we're not going to kind of go through it here, but you can go back to taxtalk4u.com and do a search for the One Big Beautiful Bill, and you can hear, I think we had 2 or 3 episodes on the One Big Beautiful Bill, and we'll probably have more of them coming up for the changes for 2026 and 27 and going forward, and the effects the One Big Beautiful Bill will have. So we're talking about the changes and the problems the IRS is having. But what really becomes the biggest problem is problems for individuals that actually owe money to the IRS. And when you owe money to the IRS, you need to be in front of the problem. You need to stop the IRS collection activity. You need to do the things that you need to do to get yourself back on the straight and narrow and not continue to add more tax debt to this. And that may be tax planning. That may be good tax preparation. Maybe your problems are resulting from using a bad tax preparer, or as we say, working in the trucking business, people that don't know the industry that you're working in. Now, we're well qualified in the trucking business. We do a lot of taxes and bookkeeping and taxation solutions for daycares and some other businesses. TruckerTaxTools.com works with truckers for bookkeeping and taxes. And we're going to take a quick break, but we're going to come back and talk about what do you do when you owe the IRS money, and what can you do to get ahead of it? And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to TruckerTaxTools.com, a solution built specifically for truckers. TruckerTaxTools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, so what do we do? You owe the IRS money. You've been getting those wonderful letters from the IRS, and the IRS says, hey, you owe, I don't know, $20,000, $30,000, $50,000, $100,000, $1 million, $2 million, whatever the number is. It's significant. It's significant in your life. It's significant amount of money that the IRS is coming after, and maybe you don't have it. So what do? We always talk to people who stuck their head in the sand like an ostrich and said, hey, we just ignored it and maybe it'll go away. It doesn't go away. It's not like some of the other creditors out there who, hey, they determine that you're insolvent without doing anything, and you can ignore it, and they don't do much. It just affects your credit reporting. There's the IRS then, and the IRS doesn't ignore it. They just don't let it sleep. They don't think that you should get away with it, and they're not going to let you do it. They're going to come after your bank accounts. They're going to garnish your wages. They'll even garnish your Social Security. They'll garnish your state income tax refunds. Anything that's out there that they can get their hands on, they're going to get. And you need to understand those rules in what the IRS is all about. It's collections. So throwing that letter in the trash does not prevent IRS collections in any way, shape, or form. Make you feel better. Maybe it makes you think that, hey, I didn't look at it, I didn't open it, they can't do anything. Maybe you didn't go down and pick up the certified letter because you didn't have time, or hey, you think if I don't go pick it up, nobody's going to care. They're not going to do anything. Well, those are all wrong. Every one of those things is wrong. So open the letters, read them. If you have a final notice of intent to levy from the IRS, guess what? They're going to levy. They didn't just send it out for the fun of it. They sent it out because they know you have money in a bank account and they're coming after it and they're going to do collections. Now, that means they're going to find what your bank, they're going to find where you work. So they may garnish your wages, and then you're left with almost nothing. Or maybe they levy your bank account on the day payroll came through and the bank sends everything to them. And then add insult to injury, they took everything out of your account and then the bank sends you a bill for $249 for processing the IRS levy. That, guess what? They can't pull that money out of the IRS levy because all the money they pulled goes to the IRS. You still owe another $249. So you're now negative. Not just that, but you're negative the bank fee, and then you're negative everything that was about to hit your account. Like, hey, maybe you send a check for your mortgage, or maybe your mortgage pays the next day. Well, that bounces. Your car payment bounces. Your insurance payment bounces. All those things, and now you have nothing. So ignoring it gets you into that kind of trouble. Now, what I tell you is hey, look, hey, call Taxation Solutions. Let us get some tax relief. Let us get a hold on your account. Let us get action moving so that we can get you the settlement or the payment plan or the partial pay installment agreement that you need to stop the IRS. And that starts by calling us at 888-930-1016. Again, 888-930-1016, or go to taxationsolutions.net so that we can get you a free consultation. And if you call in, hey, tomorrow, even today, we will get you a free tax analysis to help you through that if you owe more than $10,000 to the IRS. Just let my staff know that, hey, Mr. Fowler on Tax Talk for You said, hey, we can get a free tax analysis if I owe more than $10,000, and we will do the analysis for you for free and give you a free consultation. Hey, what's better than that? Free. Hey, we're trying to help is what we're here to do. Again, call us at 888-930-1016. Hey, we've talked a lot about self-employment, and one of the biggest industries that out there for self-employment is the trucking and truckers. So if you're an independent owner, operator, truck driver out there, maybe you be leased on, maybe you have your own authority, truckertaxtools.com is the company to go to for bookkeeping and taxes. We know everything that needs to be done for truckers out there, and we don't miss tax deductions because, one, we're on top of what's going on in the industry. We do a lot of talk at OOIDA, Owner Operator Independent Drivers Association, at Truck to Success. And, we put a lot of time and effort to help truckers across the board. We got started helping with tax problems with truckers, and they came to us asking for help with bookkeeping and taxes. So we put together these wonderful low-cost plans, starting at as simple as $25 a week. You can't beat that. You can't beat that on the internet anywhere. I've seen other companies advertising, hey, it's $200 a month just to do your bookkeeping. $25 a week is where we get started with bookkeeping. Now, if you have multiple trucks, it can go up from there, but that's our baseline price. Pricing that you can't beat anywhere for the quality of bookkeeping you're going to get that makes sure that you're getting all your deductions and everything that you need to help you in business. A little bit of counseling, coaching, tax consultations, making sure your estimated taxes are set at the right amount. Now, we can't make you make estimated tax payments. All we can do is advise you. It's still up to you to make those estimated tax payments. So if you have estimates to be made, get in and make those estimates every quarter. Now, remember, I don't care whether you're a truck driver, self-employed, if you are required to make estimated tax payments, you got to make them in the IRS's quarters. Now, nobody ever said the IRS makes sense, so you can make sense of this. The first one is due April 15th. Man, what a bad day to make the first estimated tax payment. Not only do you have to make sure that your taxes are paid for 2025, but then you got to make sure your first estimate is paid for 2026. Same day. Then the next one is only, 2 months later? And it's June 15th. So you got to make your second quarterly tax payment, not a quarter. It's only 2 months. So, and then the next one is due September 15th. And then the next one is due January 15th, 2027. Now, if the 15th falls on a Saturday or Sunday, then the estimate is due no later than the following Monday. So you can make those estimated tax payments there as you see fit. It's all kinds of fun for things that we have going on here in Tax Talk for You. If you have things that you want us to hear or information you want to know about taxes, hey, message us over on Facebook or here through W4CY Radio at the radio station. We'll get those things on air and discuss different things about taxes that you may want to hear right here on Tax Talk for You. And again, you can follow us over at Tax Talk, 4u.com, or you can follow us over on Facebook at TaxTalk4u.com. You can also see every single episode on Trucker Tax Tools Facebook page, Instagram, and places like that. You can also see it at Facebook over at taxationsolutions.net. And of course, it's broadcast on YouTube. So you can go over to taxtalk4u.com and then link over to YouTube as well. All of our episodes would be up there for you for easy listening. And if you need something to fall asleep at, hey, you can play them when you go to bed at night and listen to me help you go to sleep. So there's a lot of benefits from listening to taxtalk4u.com. And again, every Monday right here on W4CY Radio, we're here at 10 a.m. Eastern Time. So make sure you're tuning in to hear. And another great show is right before us at 9 Eastern Time on W4CY Radio as well, which is Ask the Expert. So you can listen into them and listen to us. Hey, you have a very wonderful and God-blessed and glorious week. And we will see you next week, 10 a.m. Eastern Time, right here on Tax Talk for You on W4CY Radio. we'll see you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.